Hey everyone, welcome back to another edition of Super Prime UK with your MJ Group Super Prime valuers. Myself, Rob Cohen.
Myself, James Wild.
Welcome back everyone. The winter season is upon us. Snow is just around the corner if it hasn't hit you already. And we are back with all of the latest news in property, finance and economies. So much to talk about today, James. We've had so much happening in the sense of the budget, monetary policy, the US elections. Where are we going first?
Well, I think let's start first with the interest rate cut. So I think since our last show, interest rates come into 4.75%, which was definitely welcome news. We weren't sure if it was going to come at that Monetary Policy Committee meeting or it's going to be a nice little sort of surprise before Christmas. However, shortly after that, we had the news of the inflation figures, which were slightly less positive there. So where's that left us in terms of the mortgage market? So those sub 4% deals, Rob, those have departed now and aren't really available in the market. Mortgage rates have risen over the last few weeks in terms of their availability, product pricing, and in short, this is largely down to the larger than expected interest rate rise, which beside that means that the base rate cuts are going to be probably slightly slower. Interest rates 4.75. So I think as we move through and into 2025, I think the rate is going to come down slightly slower than we initially expected there. So like I intimated there, I think the likelihood of another pre-Christmas interest rate cut is now very unlikely with inflation figures at what they are.
Yeah, I think a bit of a surprise. Most of the lenders that I've been speaking with believe that it's a blip and nothing more. So they're still looking at possibly 3 to 4 reductions next year. And what I would say is, yes, today it does look like that interest rate decrease is going to be slower, that things can change very quickly. And if headline data on the economy, GDP, inflation turns good in Q1 25, it wouldn't surprise me if that changed and became more rapid. So agree with everything you say, James, but as we know, things can change very quickly with swap rate, SONIA, and the mortgage market products. And I believe positively things will go back in a good direction in Q2 next year.
Well, if we have a look at some of the average rates for some of the availability for the 5-year fixed and the 2-year fixed. So in terms of the average 2-year fixed mortgage rate, this is now at 5.09%. Hasn't been a huge amount of change in that figure. However, while the 5-year fixed deals, these are averaging 4.89, which has crept up a little bit in the last few weeks, Rob. I think the previous week's average was about 4.75. So blended averages there in terms of depending on what the asset type is, what the LTV is. So if we just drill down slightly onto some of the best available in the market, I've largely focused on the 5-year fixed mortgage products as these have had greater fluctuations than the 2-year fixed, what we've seen. So one of the best deals out there at the moment, NatWest have a 4.07% 5-year fixed. That's obviously based on a very low LTV product and also comes with the arrangement fees on that. I think Santander at the present moment is the second best rate, 4.14. Halifax 4.23, Barclays 4.28. We've got a number there fairly closely clustered together, but we haven't quite got that competitive mortgage product and pricing, which we have had in the aftermath of some of the previous rate cuts.
Yeah, I mean, again, very interesting space. I believe things will get better. Hopeful for a positive year in 2025 on the mortgage rates.
Yeah. Rob, let's talk about next the buy-to-let market. Is a market which has come under severe pressure the last couple of years. It's really struggled. But I think it's very important to differentiate the standard buy-to-let market with a slightly more technical adapted HMO, a multi-unit freehold block, commonly referred to as the MUFBs. Typically what we see, Rob, in this more specialised market, a standard 3-bedroom mid-terrace house is altered to provide, 6 bedrooms, possibly 6 ensuite bedrooms, which is going to hugely increase the monthly rent and also have a knock-on effect on what yield that property might derive. So landlords in this space, the adapted HMO and the MUFB, I'd say sort of operating slightly more sophisticated than the rest of the buy-to-let market. A lot of these landlords now are incorporating the properties into limited companies just to draw on the more efficient tax structures which you can get on the back of that. And I think, Rob, the mortgage market has definitely adapted to this space, as previously lenders within that space were a very limited pool. Just with the more technical aspect, it was slightly an uncommon arrangement. So recently, Metro Bank have entered that market, and also typically, a number of building societies, traditionally very risk averse in their lending, have also now entered that space. So you've got Leeds, Family Mansfield, Nottingham Building Society now operating within that space. And I think over the last couple of years, Rob, that residential investment market has been one that's probably been performing one of the strongest, I'd say.
Absolutely. I've been with a lot of our lenders over the last few weeks, some of them challenger lenders, some of them short-term bridging lenders. And that multi-unit HMO space is a real space of growth and opportunity. And I don't see that slowing down whatsoever because of the challenges that the mainstream buy-to-let market has faced. And all of the word from those lenders is more money going into the space, more institutional money, better returns on investment. And I can see that being a strong performer in 2025. Yes, it's a specialist area. It's an expertise area. Investment valuations do come into it for those multi-units. So challenging to lend on and challenging to work on from a valuation perspective, but a real growth area in the lending market. And I agree with everything you said. It's a really growing marketplace.
Yeah, thanks, Rob. And I'd say, we've been particularly active in that space the last couple of years, working with all of the leading lenders. And it's technical from a lending perspective, but it's also extremely technical from a valuation perspective. And it's very important to have all the right eyes and ears on the ground, make sure all the regulations, the property licenses, the arrangement of the properties have all the necessary planning consents there. The tone of values on the street, sometimes you can have a bit of a disconnect between what property is yielding versus the tone of values on a street. And you don't want those two factors poles apart, as that's when you get the sort of artificially potentially disconnect on the pricing. Rob, let's chat about, let's switch to the prime markets and what we've seen. I think it's been quite stop-start in 2024, but I think 2025 could be a slightly more positive market. And how do you think the market conditions, some of the political decisions, the election, how is that going to affect the prime and super prime markets, and how the high net worth individuals are now going to operate in London and the UK?
Yeah, I think the main thing from the budget, obviously, was the stamp duty surcharge, going to have a negative impact on the buy-to-let market for sure, that was already in a challenging space. So that hasn't gone down well. And then there was the big question mark over the non-domicile piece and the residency structure of what the new government would bring into play, to which that still isn't clear. I think when we last spoke in our last show, James, the biggest uncertainty in prime, super prime world was whether the wealth in the UK and London would be leaving far afield to Dubai, the Middle East, Far East, Luxembourg, Switzerland, Italy as an example, that are offering really good domicile tax propositions. And at the moment, that's still a question mark. So I'd say the budget could have been worse. It clearly could have been a lot better. Currently, it's still a holding position. I don't think the migration at scale is happening like the fearmonger has suggested. At the same time, there's no guarantee that we're going to keep that wealth here. On the flip side, we've just had the US elections, and to a certain degree, that will work in favour of UK prime and super prime, because there are many wealthy individuals in the US that will not remain in that country because of the results of the election, and probably one of the first countries they would choose to live in because of security, because of work, family, education, schooling, the legal system, job opportunities, is London and the UK. So one country's supposed loss with the UK non-domicile position, and another country's change in political path could be to our gain. And I think we'll see a lot of US high net worths come here, and they're not affected by that tax position because of the US arrangement. So I think there is upside, and we should be positive, like you said, James.
Yeah, I think on the non-domicile status going to be very interesting, as the previous government quite clearly set out the steps and the measures that they would be taken. And the new government hasn't necessarily fully adopted those, but has been slightly more vague so far in just announcing their residency-based regime, which will come in. But we're just still awaiting the finer details of that and the sort of strength and severity of what might come out. So, like you say, Rob, it's a little bit uncertain and wait and see at the moment. But once that gets announced, that will add real clarity, and we'll be able to draw on more accurate, I think, predictions on what might happen in the super prime market, and in particular the high net worth migration.
An interesting trend to share with the audience, and thank you for all the loving that I've received on the streets and in meetings over the last few weeks. Amazing to always be asked, Rob, when's the next show? When's the next show? So thanks for that. One of the trends that we've been seeing, and I probably did call this maybe a year and a half ago, a lot of the super prime assets went unleveraged with cash acquisitions over the last 24 months because of the cost of debt and borrowing. And now we're finally seeing that money being loaned out with refinance propositions with some of your super prime lenders out there. And that trend will continue in 2025. And that's positive for a leading super prime valuer firm like ourselves, because that business starts to come through where for a long period of time, those cash transactions weren't leveraged and didn't go through the bank system. So I think that's going to be a positive trend for all of you private bankers, relationship managers, wealth managers. That's going to be your business in 2025, and hopefully you'll have a fruitful year on the back of that.
Yeah, definitely. Like I say, Rob, the super prime space, a lot of cash acquisitions here in London. And if we take the years of 2022, 2023, the last time there was more property sales above 10 million was back in the previous peak of 2013, 2014. So I think that just shows how active the prime market has been up until this point. 2024 slightly more suppressed, but I think in terms of the like I say, property acquisition, Rob, that has dramatically increased in the last few years. A lot of that property at this current time will not have the mortgage debt. So hopefully that leads to, like I say, a more fruitful, a busier 2025 for our lenders and ourselves.
And again, on the back of all the meetings that we've been having with our clients, we're very aware that on average, the expectations and the target for lending next year will be an increase of somewhere between 10 and 15%. That's what the modelling is telling us currently for 2025 activity. And that's just really good for the industry and the mortgage market, the lending market, and really good for everyone. So I think light at the end of the tunnel, and definitely 2025 will be a year to look forward to positively, James.
Yeah, definitely. And, you know, as we look forward into 2025, I think that there might be slightly fewer trophy assets which actually trade in that space. But I think in terms of the remortgage market, that is going to be the strength for the lenders. And, you know, like I said, transaction volumes might not be, quite the same as we've seen in the last couple of years. But in terms of as the mortgage product and pricing becomes more attractive, this will definitely lead to higher lending volumes, despite a slightly more subdued market potentially.
Yeah, I think on that point as well, on the trophy assets, just because there might be a migration of ultra high net worths being domiciled in the UK, it doesn't mean they'll be selling their trophy assets. They still might want to keep that residency. So one thing doesn't absolutely lead to the other. So I think that's caution there with that one. It's important to understand. Exodus and migration for domicile purposes doesn't mean selling a residence. It might mean that, but it doesn't categorically mean that. James, on the sporting front, Liverpool running away with it. Guardiola has just signed a new 2-year contract. Did you see both of those coming?
No, I thought it was going to be last year actually, Guardiola. But I think we're going to see more of it. Maybe he'll, I think in his last season, I think he'd maybe want to, win the title, win a major trophy, and the squad at the moment losing 4 on the bounce. Surely they're going to return this week.
And Liverpool runaway leaders.
I think they haven't had many injuries so far. They've been a little bit fortunate there, but they've still got more in the tank. A few of their players haven't quite returned. Some of the strikers, the Chiesa signing hasn't. I think he's played a game yet. But in terms of their backline, I think the centre back partnership has been strong, and they've had a little bit of depth in the fullback positions.
I don't think a team has ever lost a title being in the position they're in at the moment. So history says it's theirs to lose.
Yeah, Arne Slot.
Yeah. Great, James. Great to have the show back. Great to share with you all of that news. US elections out the way, budget out the way, UK elections out the way, interest rates, monetary policy out the way, festive season ahead, and a positive 2025 to come. Thank you everyone for watching. Thank you for supporting, and we'll see you all again soon on Super Prime UK. Thanks, James.
Thanks, Rob. Thanks so much, everyone.